The price of gold has had a good run off the late March lows, down at 16.80 an ounce, pushing up towards 19.20. It's been a little bit flat over the last week, but actually is the latest dip just another buying opportunity? I thought it'd be interesting to do an update on gold, given how this trend has evolved over the last couple of months or so. Gold had been in this correction off the all-time highs in August of last year. Really lacked any sort of upward momentum, but that does feel like it's changed since the end of March. As I say, it's been perhaps a little bit flat over the last couple of weeks, but as usual in this video, I thought let's take a look at it and see if there's a trade here. So I'll talk about some of the things affecting gold at the moment, and then we'll come back and see if we can set a trade up. We do have a couple of trades at the moment. We've got one from the 29th of April, buying in at 17.75, that's up about £400, that's done okay. One from the 19th of May, buying at 18.80, that's not done much at all at the moment. So I thought, well, let's take a look at it, see if there's an opportunity on this latest dip, and see if we can get a trade on. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on the gold price. So we're halfway through the month, take a look at it and see what the next couple of weeks, next month or so might bring. So as usual, in this video, we'll take a look at some of the recent news in a bit more detail, what's been affecting gold. Then we will jump back onto the platform and see if there's a trade to do from these levels. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And we also, of course, every Friday at 2:30 UK time, now do live streams where we take a look at gold and a whole host of other markets as well in real time. So if you're subscribed with the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live. Okay, let's get into it and let's take a look at what's been affecting gold in a bit more detail. So we had seen something of a lack of momentum since the 2020 highs in August of last year. We had seen the gold price giving up gains, but this month we have seen the price trade to its best levels in about 4 months. We're back up to where we were in early January. And I think what's interesting about this, even though we saw a bit of weakness towards the end of last week, the 3-month recovery off the March lows is still very much intact. So has the price of gold finally managed to shrug off this correction it was in from last summer? From April and into probably the first half of May, a weaker US dollar definitely helped here. We've seen plenty of volatility for the dollar this year. It had been under pressure. And I think, as we've seen a falling US dollar, this is something that does tend to benefit and lift the price of gold. But a note of caution here, I think in the last couple of weeks, we have seen the US dollar finding support. So if it is building a base down here, the US dollar, and we see it recover, don't be surprised to see some pressure on gold in the short term, at least from here. There's been a lot of talk about inflation earlier this year. Investors have been somewhat concerned about inflation. If that continues, that's something that traditionally would help the price of gold with it being used as a hedge for inflation. But to get a feel for the levels, let's look at the big support and resistance areas to watch. Then we'll jump back onto the platform. So I think the immediate hurdle on the upside is the early June high, up at $1,916 an ounce. I think if we break that, then we could be looking at early January highs. $1,960, I think, is the next target. On the downside, lots of support left on the way up. The first of these just above 1,850 and then back down towards 1,800 from earlier in May. But as usual, to put some color on these numbers, let's take a look on the platform and see if there's a trade. So, of course, we always start with a longer term trend in gold, going back to those August 2018 lows. So we're almost 3 years into that. And then, of course, the price ran up above 2,000, up to 2,075 into August 2020. And since then, we have been in this correction. Lower highs, lower lows. But I do wonder if what we've seen during May is a suggestion that perhaps that correction is over. And the trend we need to focus on, we had a look at it right at the beginning, is the one off the late March lows. So we'll have a look at the price action on that in a second. First of all, let's take a look at the RSI. So the Relative Strength Index, as is often the case, as I often say, In strong trending markets, they can get you to try and go the wrong way, go against the trend. The RSI on gold has been pretty much bubbling around overbought since early May, when the price was, about 1840 an ounce. Clearly, it's pushed a lot higher since then. It's sold off a bit. We had a bit more sideways or a bit more weakness in gold. We could see that RSI push down into oversold and give us perhaps a buy signal. The last oversold buy signal we had was right bang on those lows, actually, at the end of March of this year. It proved to be pretty good. Let's see how it works out if we do get a buy signal this time round. But let's focus on this trend. Let's focus on this trend on the hourly charts. Let me just change the time frame on this. So to my eyes, this has been a pretty good trend. If we take it from those March lows down below 1700, we can see we've got a few touches on this trend line. The latest touches coming in over the last week and a half or so. You know, from a technical point of view, clearly no market moves in a straight line. We get backwards and forwards. So a sort of chartist would treat the latest sell-off down towards 1817, 1880, the same way as this move back here earlier in June is just another buying opportunity. So for me, if I wanted to do a trade here, I'd want to be a buyer. The only question is, where does my stop loss go? I suppose if you wanted to be really aggressive, you could put it the other side of that uptrend line, so the other side of 1870. I think that's too tight personally. So I'm going to give it a bit more wiggle room. So for me, I'll be looking at these old lows here, for example, from the middle of May down around 1850. Perhaps let's give it a bit more room again from that and put it in at 1830. So I'm going to set an order up to be a buyer. I'm recording this ahead of the market open, but I can set an order up to be a buyer. The market closed at 1879. My stop is going to go in at 1830. Let me put an order in to buy at 1879. I'm assuming we're going to have a fairly quiet start to the week. Let's set that order up. Right, it's ready to go. So the market at the moment closed at 1881 to buy. I would like to be a buyer of 7.2 ounces at 1879. So I need the market a couple of dollars weaker than where it is now. I'm reasonably optimistic that will get filled. If that order gets filled, put a stop loss in at 1830. So below these sort of mid-May lows, below that sort of level, and that's for my usual risk of £250. And the market is closed because I'm recording this on the weekend before the market opens. Let's place the limit order. So my order's created, my order's gone in. So my order's going to sit there at 79 now, 1879. If the order gets filled, the stop will be active. And it'll be interesting to see what happens. I think if the market does start to break below some of these recent lows at sort of 1850 through to 1870, the risk is this trend is running into trouble. And I think the risk then is that we will see perhaps a bit more pressure come on the price of gold. And the first target for me would be a run back to the late April zone around $1780, $1800 an ounce. But for now, it's been a little bit of a boring week and a half. The trend, though, is still up. We've got those existing positions. Let's see how this trade works out this time round. That's it for the update in gold. We'll come back to it and see how it progresses from here. But for now, from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.